Hi, I'm John Stevenson, the Guarantee Retirement Guy. Today we're going to be talking about the best ways to protect your savings from market risk. So the market's doing great right now. It might not be so great next year. We just never know when it will drop and how far it'll go. Okay. We do know that it will happen at some point. It always does. Okay. So if you're thinking, hey, I'd like to protect some of my gains, I'd like to protect my savings, well, there's different ways to do it. Okay, I'm going to talk to you a little bit about MYGA contracts. They're annuity contracts. They protect your principal. They give you a lot of growth. And I'll talk a little bit about the FIA contracts as well. But of course, besides that, of course, you can put it into a CD. You can put it in a bank account, right? You can put in some high yield savings, money market, right? There's things that we know we can do. Even bonds, certain bonds can be good, just depending on the interest rate environment, right? But each of these things has their risks. You know, you might have no market risk, but you could have other risks like inflation. Okay. When you have inflation eating away at your money, yeah, market risk might not be a problem, but the value of your money is going down. Okay. So I'm going to show you how you can do that with an annuity and protect your hard-earned money from any type of market risk. Okay. So I'm sharing my screen. And I'm just going to show you the different MYGA contracts. These MYGAs, they stand for multi-year guaranteed annuities. Okay, so if you look at these, you'll look at 2 years, and you can see, and this is just showing the top three. There's hundreds of these. Okay, so this is showing the top three for every term, that you decide to lock your money in for, because you are locking your money in. So that's the downside. You're locking it in, but there are free withdrawals that usually range around 10%. Some of them don't offer any, so it just depends. But at least you're protecting your money from market risk, and you are getting some sort of guaranteed return on your investment. The nice thing about if this money is non-qualified money, meaning it's just cash from your bank account, money that's already been taxed. The nice thing about this, unlike a CD, this grows tax deferred. Okay, until you take it out. It's pretty nice. So if you look at here, 2, 3, they're all around 5, 5.3, 5.5, 5.2. You see the 5 years, 5.5. Let's say you want to pull this out. What does 10 years do? Well, 10 years, it's 5.5, 5.4, 5.2. You're thinking, well, I want an A-rated company because A-rated typically is safer. Then we're right in the middle, 5.4. Okay. Heartland National gives you a little bit more. They're good. I work with them as well. But if you want a little bit more safety, then look at Ocean View, because at the end of 10 years, your $500,000 is guaranteed to be worth $346,000. Guaranteed. Okay. And after the first year, you can take up to 10% out every single year without penalty. Okay. This is a great option. Okay. You have 100% market protection, and you also have gains. Okay. So you're protecting yourself against inflation eating away at your money, and you're also protecting it against market. Okay. So you can see this, you can see how it grows over time. You can see the earnings starts at $27,000 a year. And if you let it compound, it grows every year. At the end of it, you've got $800,000 earning $43,000. With total interest earnings of $346,000. That's huge. Okay. You're totally beating inflation, unless of course inflation is higher than 5.25 or 5.4, but still you're doing a lot better than a bank account, right? Okay. And a lot better than a CD, especially if you want to have tax deferred gains. Okay. So that's it with a MYGA. Okay. MYGAs are great. They're really the annuities world version of a CD. And in my opinion, a lot better. Okay. But you might be thinking, well, okay, that's all great and dandy, but I'd like to get some more growth. If the market does go up, I want to have some of that too. Okay, well, that's fine. We can do that. Performance Analyzer kind of shows us the best ones out there. And I'm going to actually pull out some ones that I know work, because a lot of these will have fancy indexes that do not work. Okay, so we're going to have, we want to make sure our rates do not go down, the amount of the participation that they allow in the index. And I'm going to show you the S&P 500. Okay, so going to the S&P 500. If we look at that, this pulls up the best index options for that. And right now, MassMutual is the top performing one as far as the S&P 500 and the rate lock, the cap. They're not guaranteeing you 8%, but they're guaranteeing you that they're not going to cap it lower than 8%. So if you earn 8% every year, you're going to get it. If it earns 10%, you're only going to get 8. Okay. But in return, when the market is down, you won't lose a dime, because you're only getting the growth of the call option. Okay, they're purchasing the call option, and that's what keeps you out of the index, but actually get the growth of the index. Okay, so if you look at this, all right, well, that's pretty good. So if you look at that, and this is locked in, by the way, for 7 years. Okay, at the end of that, they can change it. But you look at this, look at what it could look like if it's done what it's done in the past 10 years. Then you'll notice after 7 years, it's grown to 680,000. In 10 years, it's grown to 793. That's pretty nice. You can see the down years is like 0 because you're not making anything. And you're not losing anything, excuse me. But the higher years, you can make an 8%. The downside of this is because you could be making more from other annuity contracts. Like with National Life Group, they offer higher caps. The trade-off, though, is that they do not have any sort of guarantee that the caps will stay high. We just have watched them over time, and I've seen that they've kept their rates high. I recommend them, but I don't recommend them if you're looking for an absolute. So anyways, hope this has made sense. I want to keep this video a little bit shorter than the rest, but I want to kind of give you a little bit of an insight how you can protect your savings from market risk, also be able to have a lot of growth on that savings. Okay, so if that's something you want to chat about, if you want to talk about annuities, book a call. There is a link in my calendar right below this video. Go to my website, check out the MYGA rates, and you can see for yourself and check out all the rates, and you can book a call with me there as well. So again, I hope you enjoyed this video. If you do, like, subscribe, share. If you have any questions, comment below. I'll answer them. And I really appreciate you watching, and we'll see you next time. Thanks.